Hello guys, so welcome back to another video on ICC trading strategy. So basically we're continuing from where we left off from the last video. So on the last video we're talking about correction, right? On this video, if you go and check it out on YouTube on my channel, you would see this video. Go and watch it. It's just a continuation from the previous video, from the part 2 video to so today we're going to be explaining the whole ICC strategy, right? So before we start, I just want to give you a background on what ICC is. Okay, so basically ICC is just a way to trade, to how you use market structure and price action in order to enter or get a position out of the market, right? So indication, let me use some drawings. So basically when you look at the market, right, to be in like an uptrend like this one, right, the market is making high highs and high lows, right? So this is the previous high, so whenever price breaks a high like this from this point, right, from here, price broke above here, indicating it is buying pressure in the market, right? So you can see price broke out from this level, creating this new high in the market, right? So we mark this one as a new higher high. So whenever a new high is created in the market, right, what you should know is that price has the potential to buy from this level, from where it broke out, back to the high it just made, or even further high up, depending if it's in an uptrend. Most likely to buy up if it's trading upwards, right? So we're looking at this will be our target level. So what happens after market is made an indication? Usually, or most of the time, the market corrects back into below previous high, right? So price has to come back into this level below this previous high that we broke above, so that some may call this the liquidation phase, right? We're to be taking out those former buyers and stuff like that, but it's not breaking reaches. Usually the market may correct all the way back inside here, may also go back, go down here, even reach maybe here too, right? All you have to know is that after price is made an indication, it corrects. Then what do you do after the correction, right? Usually these movements, or you get an indication on the 4-hour time frame, right? So indication, get it on the 4-hour, the daily, or the daily time frame. If you're a swing trader, right, that's where you get your indication. So then the correction, you can just spot it on any time frame, right? Then what do you do after the correction is, how do you know the correction is ended, right? Price, when it made this new high, it was making lower lows and lower highs, right? So basically, when this trend shifts to the upside, right, start making higher highs and higher lows, higher highs and higher lows, right? Probably you would spot this on the lower time frame, such as the 1 hour time frame or the 15-minute time frame, right? So you just go down to the lower time frame. So the time frames have to align. So basically, if on the 4-hour time frame, it's having a lot of rejections here, right? Maybe signifying that it's trying to make a higher low. Then on the 1 hour, maybe it's just shifting, creating breaking structures to the upside, right? Or maybe even the 1 minute time frame will be already shifting to the upside. 15, all the time frames must align. That's what you have to know, right? Then where do you get your entry, right? So the best entry you could get is when price comes above this level. When price goes above this level. And why above this level? You already know that price, when it went above this level, right, it made a new high. So basically what happens here, after price breaks above this level, it's looking to go to this previous high, right? It's looking to go to this previous high. So you get your entry from here. That's where you put your entry. Then you target the new high and your stop loss below the previous low that has been made, right? That's all you have to do to enter, right? Price above the previous high here. When price starts breaking this high, that's where you get your entry, and your target level is this new high which was made, right? The indication high, right? So when this trend may possibly, if you are trending with market structure, usually if price is making highs and high lows, it's looking to make a new high above this previous high which was made, right? It's looking to make another new high. So that's where you take your partials right at the new high right here. Then you target, just keep on scaling upwards, targeting the price, because price, if it's in an uptrend, right, it will be continuously making those higher highs and higher lows, higher highs and higher lows, until the trend shifts, right? So you'll be targeting, you'll be collecting your profits all the way up here, right? The market's made a new high, take your partials, correct, then made a new high, you take your partials, new high, you take your partials. That's the advantage of using this strategy, right? The most important thing you have to do here is positioning, right? You have to make sure that you enter where a position where when price goes up below this low, right, you know that you have been invalidated in the market. But if you get a position, right, a good position, a good entry, you would be safe from all these liquidity sweeps, right? You would want to enter from here, here or even here, right? Because the market can even go lower, right? So basically you have to make sure you position yourself where it's safe, right? You don't have much drawdown and you have maximum risk to reward ratio on your trade, right? On your position. So I'm gonna open to the chart right now so I can give you some examples on how you can trade these ICC, right, after an indication. So I'm on gold right now. Let me see if it's recording. Yeah, so I'm on gold right now. So let me just let me remove this. Right, so I'm on the 4-hour time frame right now. So whenever you open to the market, right, the first thing you need to do is to mark your levels, right? So I'm gonna do that right now. So let me show you. So you can see price broke structure right here. It's in a downtrend, right, making lower lows and lower highs. That's basically it, right? So let me mark my levels, right? So this was the lowest point where market previously went, right? You can see that, right? So what else do we see here? The market, when it came here, it made a push upwards, right? Failed to break this low, right? The market failed to break this low, creating a lower high, right? This is a higher low. So these things you have to be aware of every detail that the market gives you, right? The market won't just move in a certain direction without giving you any signs, right? So you see, a lower low has been made, price went up, failed to break this low, so it created a higher low, and you can see this is another level here. Price is failing to break this level. So what do? We mark that level. Right, after we mark this level, see price is failing to break here. Whenever price reaches this level, it's selling, right? You can see over here. Market is selling, right? It doesn't want to go above this level, which signifies that at this level 4030, 4025, right, there are a huge number of sellers, right? They're trying to push the market down, right? But what you should notice, right, is when market is being pushed downwards, it doesn't want to break this low, which means buyers are also fighting to buy this market, right? You can see from here, price is failing to break this low. It's just pushing upwards, right? So we can also see that another yellow was created here, showing us that price doesn't want to go below this level. You get it? Okay, so what happens? The market consolidates, creating another higher low here. These are signs you should be looking at when you are in the market, right? These are a lot of signs. This is, we're basically explaining market structure right now. We haven't hopped into the indication, but we're just talking about price action, what price is doing. See, price is consolidating. Why is it consolidating? It's continuously creating these higher lows, higher low, higher low, higher low, right? So what do? Wait for the indication, right? So you can see that price finally broke above this level, right? You can see that price broke this level to create a new high. So what do? We mark that high. So this is our new higher high, right? So market is gave us an indication, right, to the upside. Markets want to buy, gold wants to buy, right? Indication. So basically above this level, market is the buying potential to go to this level, right? So you can see that when price broke above here, it reached a certain point where sellers were more powerful than the buyers, right? What happens after the indication? We have correction. So we don't trade this leg, right? This leg, we don't trade it because it's just our indication. It's just showing us that markets want to buy up to this level, right? So after this indication, right, the market corrects. What do we have? A correction right here, right? And this correction came below, inside this level, just like we were talking about in the explanation, right? Market starts making lower lows, lower highs, lower lows, lower highs, and goes down into this area. So what do we do after the market is entered below this area where sellers are sitting, right? We go to the lower time frame, the 1 hour time frame. So what do we see? When market came here, it broke up, right? It also came down here. You see the market now reached a level where the sellers have lost momentum, right? Here, came here, price doesn't want to go any lower, pushing price upwards, right? So we now know that price doesn't want to go any lower than this level, right? So what do? We wait for price to come back above this level, which we marked, right? We make it red, right? This level, we want price to come above here, so we can enter our buy from here, our long position. Then our target level, obviously it will be the previous high which was made from the market, right? You see, so our target level will be here. Then our stop loss below the low which was made, right? So just about 20 points below this level, right? So you can see a clean move, clean buy, got a clean move up here. You can go on with this. You see price broke above this level, creating another indication, right? So basically when you spot this type of, if you position yourself here, right, you can see that market starts shifting direction. It's now on an uptrend, right? Higher low, higher high, higher low, higher high. Let me show you clearly. Higher high, higher low. So when price comes back above this level, what do? We buy again. So whenever you have a low, a small high which was made, just look to the left. Where was price wanting to go previously, right? So price was targeting this level. This was our ultimate high, right? Stop loss below here, and price we target here. Same applies here. Price gave us an indication, corrects, and what do? We enter a position above here. Stop loss below previous low, right? Our target level, it's here. You see how we got all of these trade opportunities, right? 1, 2, 3. So you can basically hold a trade from here. You can hold a trade from here, up to here. You'll be just taking partials all the way, taking partials when market is a new high, taking partials, right? You see market also broke this high. You have another trade opportunity here, you buy again. See, it's simple, guys. You don't have to complicate anything, right? Stop loss below this level, you target. So when the market starts reaching all-time highs, right, all you have to do is target a reasonable risk to reward ratio 1 to 4, 1 is to 4, right? You go again, you'll be scaling in. So that's how you trade ICC, guys. So if you have any questions, right, just comment in the comment section below. Ask anything. I will either make a video on it or I'll just explain in the comment section. So this is what you have to know on ICC, right? So let me just give you an analysis on gold currently right now, right? So we see that gold broke above here, gave us an indication. So I wrote it indication above, right? Above here we have an indication up to here. So what do? Wait for correction. So you can see that the correction came. We are having a major correction right now. So you see price comes below this level, right? So what we're doing right now, we're just waiting. I just set my alert here above this level. We're looking to buy gold. So when market comes back above here, when market comes back above here, we're looking to buy, right? So you can see that market is making higher high. It's made a low here, so we're just waiting for market to come back above here, then we'll be just placing our position, targeting the high, the previous high, stop loss below the low, then we just wait. So I'll be posting this video on this trade when this happens, right? So basically I'm looking for market to either make another lower low like this and just start trending upwards, right. This is what I'm looking to get from gold, right? Like this. So we can have our entry from here, a good risk to reward ratio. We can get buys above here. So thank you for tuning in. See you in the next one.